Hi YouTube, please give me a moment as I go live on Facebook. I'll be right back with you. It usually takes just a second or two. And we are live on Facebook. Hi everybody, how's it going? I hope you are having a good start to your week. This is Sami Abu Saad with the Strategic Day Trader and with another weekly lesson for you. I am with my friends here in the Strategic Day Trader room doing our regular weekly coaching lesson or session, and we just finished that. So now I'm just going to share with you the lesson for this week, which is what I do every Tuesday. Before we start, a quick disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. And also, before I start, if you find benefit in today's video, I'd appreciate it if you give me a thumbs up. Also, be sure to check out the links in the description below. You can find a couple of links for the Strategic Day Trader room as well as the Strategic Swing Trader newsletter. If you want to join me for the next 30 days, you can do so for just $49 for new members only. All right. So back to our weekly lesson series. We've talked so much about the buy setup, the T3 buy setup. We said primarily it's a stock that's really bullish and has corrected by pulling back, which gives us a way in it, right? And the entry is above the last bar's high, stop is below it, with the target being the prior pivot high. Really, really simple, but it's also really, really useful. Yeah. So that's the setup that we've discovered. We've talked about a lot, and we also talked in the last two lessons. We exclusively reviewed the amplifiers that make the buy setup, the T3 buy setup, even more reliable, even more better, right? More compelling. We talked about 8 different amplifiers. There's actually 10, but I covered 8. I think that's plenty. So today I want to show you what we've talked about so far has been picture perfect setups. So today I want to show you different ways or variations on that buy setup. Got it? So I want to show you how the buy setup looks, not just, the vanilla setup, which is a pullback to the rising 20, to the 50% retracement zone, in this case also to the flat 200. This is a nice buy setup, sure, but they don't always look that way. Okay, so this is what I call the vanilla buy setup, which is again the standard buy setup that you've learned so far if you've been following me in these weekly lesson series, okay, in these weekly lessons. And we said, the entry is above the last bar's high. Notice how bullish that stock was in an uptrend, pulled back to the rising 20 with a narrow range bar, which is an amplifier actually, put in a 40 to 60% retracement to support. Beautiful. So it gets multiple extra points, basically, multiple amplifiers. That, when it's a standard play like this, when it's a picture perfect setup, then no extra steps are necessary. You just basically play it right here, stop right here, and target the prior high. After 2 bars in your favor, you can start going bar by bar. All right. So that's what I call the vanilla buy setup. Okay. Just a standard pullback to the rising 20. All right. Now the problem is on as I said, a lot of the setups don't look very clean, very clear. So this is what I would still call this a normal setup. I mean, nothing much to it. It's a sell setup. But notice that you also have to involve the multiple time frames. We were just talking about multiple time frames before I started the broadcasting this lesson to social media, we were talking about multiple time frames and how to use the multiple time frames. And I'll share, I'll do a lesson on multiple time frames in the near future. But when we're looking at a buy setup or a sell setup, unless it's early in the morning and unless it is totally like picture perfect, like this one is picture perfect, you have to take into consideration the multiple time frames. And the point here is that I want to make is you have to make sure that if you're, in this case it was a 15-minute sell setup, okay? It was a 15-minute sell setup. You have to make sure that the multiple time frames are all downtrending. So if you look at the chart on the right, that's an uptrend. So how can you short something even if it has a sell setup, which it did on the 15-minute chart? How can you short something that's in an uptrend on the 5-minute chart? You can't. You're not supposed to. So what do you do? What are you supposed to do? What you're supposed to do is to wait for multiple time frame alignment. And how do you get multiple time frame alignment? Well, you get it when the time frames that you're looking at, that you're studying, are all downtrending. So you have to wait for the end of this uptrend to end, basically. So when it triggered here, if I had taken it, I would have probably gotten stopped out or almost stopped out. So why? Because the 5-minute was in an uptrend, so it pulled back and then went right back up. Trends usually continue, but notice it double topped and then it came in. So the entry for this should have been under this pivot right here. Sometimes I don't wait for the pivot to break on the smaller time frame. I look at the 5 here and I see, oh, there was another buy setup right here. I know it's very small, but there was another buy setup. So you could have actually entered right here. That's fine. It was also under the declining 20 on the 5 in this case. So entry right here and right here on the 5. So notice how when the setup is not picture perfect, like the first 2-3 that I showed you, then you have to consult the multiple time frames. The most important time frame to consult when you're looking at doing a sell setup or a buy setup is the one time frame smaller. So if I was looking at a 15-minute chart, the most important time frame that you want to make sure that is in alignment with the 15 would be the 5. Unless, that I use the 15, the 5. I don't use the 10. Some people use the 10-minute time frame, but that's too close to the 15. So I don't like to use the 10. I like to use the 5. If this was a 5-minute sell setup, then I would use the 2-minute. So I'd look at the 2-minute and make sure that the 2-minute is in a downtrend. Got it? So I just want to say that. Notice on here, we have a 15-minute sell setup. Where's the correct entry on this? There are actually different ways to enter. You can sometimes enter without waiting for the trend to end, but only if you get some kind of acceleration. So you see this? That was a little bit of acceleration. So there was a way to actually enter right here with a stop right here. And the stock was right at that declining 20. So does that make sense? So if the stock accelerates, you don't have to wait for the end of the trend before getting in it short. But if it doesn't accelerate, you'd have to wait for the end of the trend. The end of the trend happens when you get when the stock is no longer, when the stock fails to make it a higher low or a higher high. So in this case, notice how we got the pullback, rallied, another pullback. So now that's a lower high, an attempt to go higher, and then a failure. So that's a lower low. So we had a lower high and a lower low. So in this case, either here as a short or here. Does that make sense? As a short. Notice how I have alignment between the two different time frames. In this case, I use the 2-minute. Usually I use the 5 with the 15, not the 2 and the 15. But I just wanted to show you the the run-up on the smaller time frame, which can be used to use as an entry into a larger time frame. Okay, so that's another example. But there are many other ways in which stocks set up that buy setup, right? Many other ways. My personal favorite is what I call the bleed, because the stock bleeds sideways into the rising 20. The entry for a buy setup, as we know, is you get the pullback, the 3 or more bar pullback, and then above the last bar's high. So long right here, in which case the correct entry would have been somewhere here. But if a stock pulls in a lot, more than 60%, or if it's extended far above the 20, then if there's something wrong with it, in this case, again, the pullback was too deep, retraced almost 80% of the initial move up, it was still extended away from the 20. If there's something wrong like that with the play, you always want to pass on the first entry. You always want to pass. And you look to play it on a secondary sign of strength. Most of the time, it's either, the stock gives us another maybe double bottom and you get a W pattern, or sometimes it drops, goes sideways, and then, it rallies, goes sideways, and then you get a breakout. Happens all the time. We did the PPDF today. I got out of it a little too soon, but unfortunately, but it's the same thing. If you don't like I like the sell side. I was trying to get it here. I got only 150 shares. I did get 6,000 shares here. But if it goes sideways, bleeds sideways into the decline 20, that's a short. Now, in this case, it's a low price stock, but the price of stock doesn't matter. So that's called the bleed. Again, you get the pullback and then the sideways base. And that's stocks can correct either through time by going sideways or by price by pulling back. So in this case, it's a correction through time by going sideways. Notice this stock had a rally, a pullback, but that's not a good pullback to play long. Look at the double top or the topping tails, just a 100% retracement, not very good at all. So when did it become good? Once you got the double bottom here, it was okay to play it over here as a W pattern, right? Was okay, but we didn't get a trigger, and instead the stock went up and went sideways, and notice the breakout, another small base, breakout, pullback, and then continuation higher. Beautiful. So that's what I call the bleed pattern. You can find it on any and every time frame. Doesn't have to be the 15-minute chart. I mostly use the pullback entry in the afternoon on the 15-minute time frame. So a lot of these charts are 15 minutes on 15-minute time frame, but this pattern applies to every time frame. Okay, here to the downside, we had a gap down, a sell-off, and then a rally and a sell setup. Now again, the correct entry was right here. That's the correct entry. Stop right here. But only if you really like it. If you think there's something wrong with it, like it was extended, or it lacked the multiple time frame alignment, the market wasn't quite ready, then you pass on it. You don't get in. You don't use a standard entry. You look for a secondary sign of weakness in this case because it's a short. So you pass on it, and what did it do? It dropped and then went sideways into the declining 20, which gives us the chance to enter here. Okay, entering under the base, check it out. Entering under the base right here, let's say around 32.60, is not the same as entering at 32.80. You're now 20 cents below the original price where you could have entered. But it's much more secure, right? And not only that, in this case, you have a very tight stop. Enter right here, stop right here. Pretty tight stop. And then 2 bars in a row, start going bar by bar. Now, the bar by bar management that's a simple management. There are many other ways to manage stocks. It doesn't have to be just bar by bar. But I'm not going to go into that in detail. That's a whole other topic. So initially I recommend for new students to go bar by bar, but you gotta have 2 red bars in a row first. Notice this stock rallied really hard, so you don't want to be shorting it at the high of the day. That's too bullish. Even though I like the gap on this stock, I liked it. But you gotta wait for the intraday to also set up nicely. Notice it came in a little bit and then went sideways into the declining 20. So short under the base, stop above. Got it? So that's the bleed pattern. All right. Question, let's see. So in the bleed pattern, the entry is a breakout. Yes, a breakout over the range, or right, or above the base, or below the base. That's right. Of course, like every pattern that I have, I will show you. I have taken, I have dozens, some patterns I have hundreds of pictures, right? So these I already showed you. Look at this. This is just the one pattern that I just showed you. Rally too strong, you don't want to short it. Notice the sideways base. Notice the breakout failure also. The bacon shake is what I call it. And in the entry under the base, right? Short. Let me just clear the, I don't know what these black dots are, but ignore. This one, the rally, right? The short at the high of the day, but I wouldn't have done it. And then notice the drop, and it went sideways into the declining 20. Short under the base, stop above it. This one we already went over. In the initial drop, on the gap down in the morning, then the rally, it was extended, so I wouldn't have done this entry, because most of the time what happens is it goes right back up and you get stopped out if it's extended, if it's far from the 20. But when it goes sideways and into the declining 20, that's when you know it's ready. So short, stop above. Got it? So that's the bleed. When it has a breakout failure, a bacon shake, that makes it that much better. It becomes really, really confirmed, because when you have a breakout failure, what that means is the buyers actually tried to take it higher, right? They bought it, and then the stock still got slammed. So it failed. So it's the ultimate confirmation when we have these breakout failures on stocks that we are actually stocking short. Notice here, rally, sell setup, was extended, didn't do it, and notice the sideways base. So short under the base, stop above it. Beautiful. Notice the drop, 24 to 23 bucks. Big drop. More of the same, and in this case on the 5-minute time frame, right? More of the same. Notice the sideways base. This is by far my favorite intraday pattern of all times. Favorite intraday pattern of all time. Notice the sideways. Now I also like this bar a lot. This is called the battle bar, is what I like to call it. It signifies that there was a battle. So when the stock breaks under it, you can always play it short. Notice again the sideways base. The rally was too sloppy, and then the base. Notice the breakout failure right here. Pretty nice stuff, isn't it? And then to the upside, of course. Stock pulled back, was extended. Extended in the morning is okay. Notice it was at 10 o'clock. So that's okay if it's extended in the morning. But in the afternoon, it shouldn't be extended. Because if it's extended and you do it, it often fails. You play the buy setup. So you let it go, and if it goes sideways into the rising 20, then you can play it. Same here, right? Same here. Look how tight that base was. So short just under it, stop above. Beautiful. This is like the PPDF today. Low price stock, and then it crashed. This was a little base. Well, it didn't base for that long, but notice the sell setup here. Did it work? Right here. Did that work? Nope. It didn't work. It failed. But you weren't supposed to do it far from the 20. It went already climactic. And then under the base, sure, worked. And then same here. So you get the idea, I think. This is the pattern that I really, really like. And I do it, I find plays, I find this pattern on every time frame. I especially like it when it sets up on the 15-minute in the afternoon. Again, I especially like it on the 15-minute chart in the afternoon. Okay? So this is a sell setup with something, with a base. Okay? This is a sell setup or a buy setup, T3 buy setup with a base. Okay? Question, is the bleed pattern your favorite for the afternoon or at any time? Any time. Any time frame, it's really my favorite. Another pattern that I'd like to go over with you is what I call the gap fill. Now, while the bleed is my favorite pattern of intraday pattern of all time, the gap fill is my favorite location, my favorite spot to enter into stocks long. If it's a gap up and then a pullback to the gap fill, that's actually the best place to enter into a stock long. What's the gap fill? The gap fill is literally when the stock fills the gap. So if it gaps up, notice the void here, which means it gapped up and then dropped right back into yesterday's range to close the gap. That's a very, very strong support area. Notice this went a little climactic, vertical drop into minor support. So that's the thing about it, is it's at a lot of support. So when it drops into the gap fill, there's a lot of support. In this case, it was also into the flat 200, both on the 5-minute and the 15-minute chart. It was also into the rising 20 on the 15-minute chart. It was also into the 10:30 reversal time. And it didn't just pull back to the gap fill, it collapsed into the gap fill, climactic. We did in the strategic day trader room today, we played AT&T long as a climactic buy setup. Notice the collapse and then the snapback. It's like a rubber band. The more you stretch it, the harder the snapback, right? So if this pullback on this chart here was more like this, it would still have been maybe okay as a long. But when it collapses, when it goes really climactic, that's when it bounces really hard. We also played the CRC at the end of the day, at the bottom at $6, right? Nice big move up. So this stock, not only was it a gap fill play, but it was also a climactic buy setup, right? Notice gap up into resistance, into the 200 MA on the daily chart. These are the kind of gaps that I used to discard, that I used to say when I was new to trading. I used to say, well, it's gapping to resistance. Why would I want to play it long? Well, you're right. I was right. You don't want to play it long at resistance, but what if it pulls back on the intraday away from resistance? Can you play it on a buy setup? And the answer is absolutely, especially if it pulls back to the gap fill. And notice this is a buy setup. 1, 2, 3, whatever, 4, 5 red bars in a row. Disregard that doji bar. 5 red bars in a row with a COG bar at the rising 20 at minor support. That's a nice looking, at the 11:15 reversal on, nice looking 15-minute buy setup basically. But it's even better than just a buy setup because it happened on a professional gap up. And notice the move from $29 to 30, and that's the prior high, that's target. Got it? So if a stock gaps up and then you get the pullback to the gap fill, or even sometimes slightly above it, like this one. Notice it didn't even make it to the gap fill. Sometimes strong stocks, when they pull back, they don't even close the gap. That's still okay too. Minor support exists at or slightly above the gap fill. So that was okay too. All right. You can also use the gap fill pattern for early morning trading. Notice the stock gapped down under a base and rallied into the gap fill, which is minor resistance when it's a gap down. Notice also this little topping tail, that's a breakout failure, because I'll show you. This was basically what this stock did. Went up, went sideways, broke out, and then the breakout turned into a topping tail bar, and so the short was just under. So this was a sell setup into the gap fill. And look at the collapse, 37.50 to 35 bucks. Volume surge usually means that we are at a bottom, or at least a short-term bottom, right? So that's why I'm just noting it here. That was the bottom, basically. Later on, the stock might have dropped. I don't remember, but for the morning, that was the bottom. So that's the gap fill pattern. It's the favorite location on the charts to play, to enter into the buy setup or sell setup. While the bleed is my favorite pattern, this is my favorite location. Let's see. Walmart gapped up and came in hard. Was there something wrong with the pattern, or did it simply not work? Today? Oh, on November 14th. So let's take a look at Walmart. Gotta switch. Let's switch actually to, or let me just put the daily. That's the 5 minute. Here's the, no, let me switch to my platform. I can't fit the charts over here, so let me just switch to the charts. And Walmart, let's take a look at it. Walmart was gapped from a green bar. This was actually a swing long as an earnings play, so it was a pity that it got sold. But it wasn't such a good gap because it gapped from a green bar and a flat 20. Usually they snap back to the flat 20, and it did. Was there a way to be sure that this was gonna come in? No, it wasn't a good novice gap to play it short, but I'm not surprised that it failed. So this was November 14th. I wonder what the market did on the 14th. If the market did anything interesting, probably not. Yeah, the market, no, nothing really. So it wasn't due to the market. It was just, got sold. All-time high gap, got sold. A lot of times when stocks gap to all-time highs, they get sold. They do. If we look at the intraday on that day, was there anything? It went climactic, so this was kind of nice here off the 200 MA and the little spike in volume, and it rallied a little bit, but really stayed weak all day. So again, the daily wasn't very compelling as a gap. I mean, gap to all-time highs. A lot of gaps to all-time highs get sold a lot of times, especially when it's a flat 20, especially when it gaps from a green bar rather than a red bar. When it gaps over a red bar, that's when they usually get bought. We saw Nike gap to all-time highs. Was it Nike? I thought it was Nike. And yeah, here, all-time highs, and got sold, even though it was a good gap, meaning over a red bar, so it was a professional gap. Still got sold, all-time highs. Anything recent, like did Microsoft get sold? I think Microsoft gapped over several months worth of basing, all-time highs. It still didn't get bought. It just went sideways that day. So just be aware that a lot of times gaps to all-time highs get sold, or they don't go anywhere, but most of the time they actually get sold. All right. Okay. And Microsoft now is doing really well, like the rest of the market. Okay, great. Well, I hope you enjoyed today's lesson, and hope you're enjoying these free weekly lessons that I put on for you. If you'd like I said, to trade with me for the next 30 days, you can do so for just $49 if you've never been part of the room before. And if you are a swing trader, you can also join my Swing Trader newsletter and get all my earnings plays as well for just $49 for the first 30 days. After that, it goes up to $95 a month, which is still pretty cheap. Link is in the description. If you have any questions, please reach out to customer service, info@t3live.com. Again, info@t3live.com. Thank you so much, and good trading, everybody.